Good morning, everybody. Thank you for coming. My name is Andrea Bauer with the Plateau Group, and this morning we're going to be talking about the group mortgage product. If you have questions as we go through, please don't hesitate to ask. If you have the questions, somebody else probably does as well, so please don't hesitate. As the insurance company, we partner with a company by the name of IAC that administers this program. So as you work with, continue working with, or begin working with, you're also going to see the IAC name, and that's why you're going to see that. They administer the billing, they review the claims, they process the business. The Plateau Group, however, is the insurance company behind this program. So that's why you're going to see a combination of both companies. But myself, those of us in the Plateau West office are happy to be a resource for you if you have questions about product or how to offer this to your customers, quoting. We would be the resource for that. If you have application status, claim status questions, those questions would be focused to IAC. Okay. All right. Well, we will go ahead and get started. Just a brief agenda of what we're going to cover this morning, really focusing on why do we do it, what is it, and how do we do it. So we've got that broken out into several different sections. I always like to start with benefit information. If I were sitting in your seats, I would want to know, do these benefits actually help my customers? So you can see, if you have your magnifying glasses with you, that this actually does help our customers. We send surveys to our claim customers on the last payment they receive. So the last benefit, we send a survey asking them, was this valuable? How did this help you? What did you think about the premium as it related to the benefit you received? Some of the responses, we would have been out of a house. It took a burden off my mind. I wouldn't have gotten by without it. Okay, so you expect me to stand up here and tell you how good this product is because I obviously work for the insurance company. But hopefully seeing the information from our customers and their unbiased responses, hopefully this helps you to see that this is a valuable product. It does benefit your customers. Okay. How many of us enjoy paying insurance premium? Like that? Like it coming out of your paycheck? Homeowners insurance, car insurance, we enjoy that, right? Not so much. So why on earth, when you offer life and disability insurance to your customers, do they want more? They've got homeowners insurance, they've got car insurance, they've got life insurance. Why do they want more? Do they want more? No, already got enough. Okay? Insurance is insurance is insurance is insurance, right? Is your health insurance going to pay your mortgage loan if you can't work for 6 months? Is your homeowner's insurance going to pay off your mortgage if you die? Okay. Insurance is not insurance is not insurance. Okay. Every insurance policy we have has a very specific, pointed purpose. The purpose of group mortgage, life and disability insurance is to help make our mortgage payment if we can't work and to help pay off our mortgage if we pass away. Okay. But our customers don't know that unless we tell them. Agreed?
Agreed.
Okay? So that's what these top 3 phrases are speaking to, because we have to help our customers understand what they get out of this program. What is the value in them paying that higher payment? Well, it's asset protection, family protection, credit protection. Okay? So we'll start with asset. Obviously, if it's a home loan, the asset tied to this loan is their home, absolutely. So heaven forbid something happens, they become sick or injured and can't work for a while, or absolute worst, somebody passes away. Do you as the bank want that asset back?
No.
Okay. Does that family want to lose that asset? Okay, so if we can pay off this loan, or if we can make these payments for 6 months, 9 months, until they get back on their feet, the customer gets to keep that asset. Is that a benefit?
Yes.
Okay, so it's asset protection. Family protection. How many of us in here have kids? Okay, so obviously it goes without saying, we want to protect our children as much as we can, right? We'd like to put them in a bubble. We can't do that, but we want to protect them as much as we humanly can. So heaven forbid, again, mom or dad tears their rotator cuff and they're out of work for 6 months. That's scary enough as it is. But if finances are now affected and we can't play football, go to the hockey game, go out to dinner every Friday night. That's scary too. It affects that family. It affects those children. So if we can make this $1,500 a month mortgage payment, is that going to make things a little easier for that family? Okay. If we can pay off this debt and that customer, that widow, doesn't have to worry about how they're going to make that mortgage payment, is that going to help that family? Okay. And then last but not least, credit protection. I'm talking to a room full of bankers. You all understand better than anybody how important our credit is to us. Is our credit score important to us when we're 25? Is our credit score important to us when we're 65? Absolutely. Doesn't matter how old your customer is, their credit is important to them and it's worth protecting. How long does it take us to damage our credit? How many missed monthly payments?
3,
If you miss 3, how many points can that drop your credit score?
about 100.
About 100. Can we repair our credit as quickly as we can damage it? No. Okay. So instead of saying, Mr. and Mrs. Customer, do you want life and disability insurance on this loan? It might sound something like, Suzanne, I know you're a single mom. You've got 2 kiddos at home. I'd really like to help take care of this for you. If you couldn't work for a while or heaven forbid passed away, I would want to make sure your family was taken care of. How does that sound? Different perspective? Okay? So we have to help our customers understand what this product does for them. How many of us in here are going to buy something we find absolutely no value in? Yeah, our customers aren't going to either. Okay? So because you are their banker, because you are the one having that conversation with them, you're the one that has to educate them to this. If they don't ever hear this, they're going to walk in thinking, Terry's offering this to me to make a buck for the bank. Or I've already got enough insurance, I don't need any more. We have to help them understand what this product is going to do for them. Agreed? Okay. Bank impact, lender impact, these are pretty obvious, pretty straightforward, because that's what the experts will tell you. Don't buy this product because all it does is benefit the bank. Okay. Again, in the time I've been in this industry, I've seen several families have their homes paid off because somebody passed away and they didn't have to worry about that mortgage payment. I beg to differ. Customers benefit from this as well, not just the bank. But does it increase income? Sure it does. Does it reduce charge-offs and delinquencies? Sure it does. Okay? And as the lender yourself, how many in here have had a widow sitting across from you wanting to know how they're going to make their next payment because there's no life insurance? Has that happened? Or who's had the phone call, I just got in a car accident and I'm going to be out of work for 12 weeks. Please tell me I took that disability. Does that happen? Okay? So you don't need me to tell you it happens. You know it happens. But your customers dismiss it. We just need to slow them down and give them the education the information they need to make an educated decision. Is that fair enough?
Yes.
Okay. So, group mortgage, obviously by the name, it is an insurance product. Okay, as we can see here, it is designed to pay off the loan should somebody pass away, and then again, help make those monthly payments if somebody becomes sick or injured. Again, the Plateau Group you'll see in here is the insurance company for this product. It is optional. Again, all we can do is provide this information to our customers. We can't make them take it. Okay? So we do need to make sure our customers understand this is an optional product that they can take advantage of, again, if they feel it's something that will benefit them and their families. And we'll get into the exclusions, age limits, etc. here in just a moment on the product card. We'll start at the top and work our way across. A few things that aren't on the product card that I just want to share with you momentarily is this is a monthly pay product. We've had a lot of concern lately with real estate secured loans, whether we can do products, what products we can do, what products we can't do. This product, because it is monthly pay, it's Dodd-Frank compliant, and you can offer this to your fixed term real estate secured loans, first or second position. Okay, but you will notice, and you can't see it there, it is on the top of the card here, it's for your residential mortgages only. So your commercial mortgages, your rental property, not eligible for this product. Okay. So because it's monthly pay, you've got some flexibility with this as well that you don't have with credit insurance that I know most of you are familiar with. You can add this to an existing loan as long as you, the bank, maintain the servicing. So as long as you maintain servicing, you can add this product to an existing loan. So not only are your new applications a prospect, so is your existing portfolio. And then on the back end, again, those of you that have worked with credit insurance, you enjoy calculating those refunds? Probably not. The bank doesn't enjoy it, we don't enjoy it. But with this, we don't have to do that. It's a monthly pay product. When the customer, should they decide to cancel, which they can cancel at any time, they stop paying the premium and they're just making their principal and interest payment. Okay, so a couple things that are different with this than with the credit insurance that I know most of you are familiar with. All right. So as we start on the life side, you'll see we can protect one or both borrowers. The minimum we can protect is $10,000. The maximum is $250,000. We can do partial coverage. So Shannon, if you're doing a $300,000 mortgage, we can protect the first $250,000 of that mortgage. Okay, so we can do partial coverage. Issue ages 18 through 69. Your customers up to and including the age of 69 years old can apply for coverage and have it. If they are 70 years old, they are too mature and they do not qualify. Okay, but once they have coverage, they can keep it until they turn 75. Eligibility is another big deal. We have to offer this product to every customer that qualifies. This is a qualifying parameter. If you have a 70-year-old getting a loan today, they don't qualify. Okay? But 69 and under, if we offer this to one customer, we have to offer it to every customer. Minimum loan term we can protect is 5 years, maximum is 30. I get a lot of questions, can we protect construction loans? The answer is no. Okay, we can protect it once it becomes a permanent mortgage. And obviously most construction loans are a year long. You can see here too by the term, that's why another reason we're not going to be able to protect that. Health statement. They always have to answer health questions for group mortgage. Sometimes they will be subject to a medical exam, but they always have to answer health questions. Questions 1, 2, and 3 on the application apply to life coverage. If they're only applying for life coverage, they only have to answer questions 1, 2, and 3. Okay. Again, sometimes a medical exam will be required, and that's what these non-medical limits are speaking to. So depending on the age of your borrower, so you see here 18 through 39, $150,000. So if your 25-year-old is borrowing $200,000, they will be subject to a medical exam. Okay. If that same 25-year-old is borrowing $130,000, they will not be subject to a medical exam. Okay. So again, as your customers mature, you can see that that threshold decreases. Questions on that?
Do they have to cover the whole mortgage?
They do not have to cover the whole mortgage. Okay, we can always protect less than the loan amount. We can never protect more than the loan amount. Very quickly, we'll get to this in a moment, but the health question, or the medical exam, EMSI is the company that will contact your customer. And the reason that's important for you to know, if EMSI calls your customer and they don't hear that from you, are they going to return the phone call? Probably not. Okay. They will contact your customer if they're subject to a medical exam. IAC will order that. It will not cost your customer anything, and they can schedule it at a date and time that's convenient to them. Okay. We have a web-based quoting tool, and we will demo that via web in another session, so we won't be covering that this morning, but that will be available on the website in a separate session. The quoting tool does tell you when your customer is subject to a medical exam, so you don't have to commit these non-medical limits to memory, so it will tell you. And exclusions, pretty standard: suicide within 12 months of the effective date. Questions about life coverage? Okay. Disability. This one happens to be my favorite because nobody has to die in order to receive benefits. It's a good thing. But let's talk a moment just about the word disability. How many of us plan on being disabled anytime soon? Have that written on your calendar? No? Your customers don't either. Okay? Again, the image of someone who is disabled is typically 80 years old and in a wheelchair. How many of us plan on being 80 years old and in a wheelchair anytime soon? We don't. Okay? The definition is they have to be sick or injured, under the care of a physician, and unable to perform the duties of their occupation. How many of us know somebody who's missed work for a month or longer due to sickness or injury? Okay? For example, if we have a surgeon who broke her hand, can she do her job? She can file for these benefits. Do most of us consider a broken hand a disability? Okay? So it's perspective. It seems like we're splitting hairs, but presentation is everything. The words you use paint the picture for your customer. The more they understand what this product is and how this product works and what it can do for them, the more likely they are to take advantage of it. Would you agree? So instead of talking to our customers about disability, we're going to talk to our customers about sickness or injury. Again, instead of, do you want disability insurance on this loan? It's, Aaron, if you got sick or injured and couldn't work for a month or longer, what would that do to your finances? That's why I would recommend we put disability on this loan today. How does that sound?
Sounds great.
Okay. So, can they have disability by itself? No, they cannot. If they want the disability, they have to take the life coverage. Okay. They can have life by itself. They cannot have disability by itself. Again, we can protect one or both borrowers. If you're doing a joint application and both borrowers are working, if it takes both salaries to qualify for that loan, would you agree it's probably going to take both salaries to repay that loan? Okay, that's a great reason to recommend joint disability coverage. Okay. Minimum loan payment we can protect is $100, maximum is $1,500. Okay, and that just equates to their monthly payment. If they're escrowing taxes and insurance, we can include that in the protected payment. All right. The 30-day elimination period, again, for those of you with familiarity with the credit insurance, the elimination period, there are no benefits. Benefits begin on the 31st day. If they are out of work for a full 6 months and qualify for benefits, they will receive 5 months of benefit. Okay, there are no benefits for the first 30 days they're out of work. But for those of you thinking, again, I've got disability at work, why would I need that? Anybody know on average how long you have to wait for your work benefits to kick in from a long-term disability standpoint?
20 days.
Typically 90 to 120 days. So for anybody thinking, wow, 30 days is a long time, it's better than most disability plans from a long-term disability standpoint. 18 through 59 are our issue ages for disability. So again, up to and including the age of 59, they can apply for coverage. If they're 60 years old, they are too mature. But again, they can keep coverage until they turn 65. Disability on group mortgage is what some refer to as a critical period benefit. Okay. Unfortunately, this product doesn't allow us to make a customer's payment for 30 years. All right, so as you see here, again, depending on the age of your borrower, depends on the benefit term they will have available to them. So again, as they age, you obviously see that benefit period decreases. If you have someone who becomes totally disabled and uses the maximum disability benefit, can they cancel their disability benefits when they're done using? Yes, they can. All right, they can cancel the disability and they can keep the life. Health statement, again, as we talked about, the health questions always have to be answered. If they're applying for disability coverage, they have to answer question 4 and 5. And because disability protects our paycheck, they need to be working 30 hours a week or more on the effective date of coverage in order to qualify for disability. I'm sure we all got up and came to work today because we love what we do, but we're also expecting that paycheck in return. Okay, so if we can't get up and go to work tomorrow, where's the money going to come from? Non-medical limits, again, depending on the age of your borrower, this is their monthly payment. So if they're 25 and their payment is less than $1,000, they will not be subject to a medical exam. If they're 25 and their payment is greater than $1,000, they will be subject to a medical exam. Okay. Exclusions, pretty straightforward here. Normal pregnancy, self-inflicted injury. The pre-existing condition, 6x6, I'm sure you're all familiar with that, but we'll take just a brief moment to explain that since I've got you here today. The 6x6 is for pre-existing conditions diagnosed or treated in the last 6 months, and we always go from the effective date of coverage. And the reason the effective date of coverage is important with group mortgage is because the effective date of the coverage can be different than the loan closing date, right? So we always go from the effective date of the coverage, and we go 6 months out. So in the first 6 months of coverage, if your customer files for disability benefits, and how long do they have to be off before they can file? 30 days, okay? We're going to come back to the effective date of coverage, and we're going to pull medical records for the last 6 months. In those medical records, if they are diagnosed or treated for anything having to do with that disability, it's not a protected event. So, diagnosed with carpal tunnel and have carpal tunnel surgery in a month, not covered. Okay? But if they wait 7 months and have the carpal tunnel surgery, is it covered now? Yes, it is. Okay. In the event of joint coverage, if one borrower is a tobacco user and one borrower is not, we have to use the tobacco rates. If one borrower is older than the other, we have to use the older rates. And again, 4Point will do that for you, so you don't have to remember that. Premiums, we can ACH out of your customer's account, or we can bill them directly. Okay. Questions on any of this information before we move on? Yes, ma'am.
You had asked if they could cancel their disability if they reach the maximum use.
Uh-huh.
And the answer was yes.
Yes.
Okay. Is it responsibility of the customer to do that?
Yes.
Or they're not notified or anything? Or
They would be notified that they received their maximum disability benefit, that there are no longer disability benefits available to them.
So
And then
are they given the option to cancel, or they'll just keep paying premium if they don't?
if they don't cancel it, the premium is going to continue to be debited out of their account.
The only time that's a concern is if they're totally permanently disabled.
Correct. Does that answer the question? Other questions? Take your silence as a no. Okay. Just a brief example. Coverage lays on top of the loan. So with life coverage, as the loan balance decreases, so does the benefit. Disability, again, helps to take care of that monthly payment. You will notice in here in the fine print, the group mortgage premium is not included in the disability benefit. They will still need to make that premium payment while they're on disability. Okay. There's a schedule in the contract, in the certificate that your customer will receive, and it shows what the benefit schedule is. Okay, so there is a minimum benefit that would be available to them. If your customer's paid ahead, there could be an event where we would pay a second beneficiary. So the bank is always the first primary beneficiary. But again, in certain circumstances, we could in effect be able to send additional money to a second beneficiary, which you would find that second beneficiary line on the insurance application. So that's what the benefit of naming a second beneficiary is. Okay. I get questions all the time. What if their payment goes up or down? Does the group mortgage insurance follow that? The answer is no. Okay, so whatever the payment is when they get the coverage, that's what the benefit is going to be regardless of what their loan does throughout the term. Again, health questions, just a brief review, but wanted you to have it in writing for reference. We talked about this already. The paramed when it's applicable, who will be calling, This is a big one. I'm not an underwriter. I don't think we have any underwriters in the room. That's why it's very important if you ever have a customer ask you, how do I answer this health question? Should I answer yes? We always want you to call the IAC number and get that information from the underwriter. Let the underwriter help the customer answer that question. We did have a situation where a banker did advise a customer how to answer the health question, advised them incorrectly, and it ended up in $1 million lawsuit. So it is very important that we not advise our customers how to answer these health questions. Okay. So who can offer? Again, because it's an insurance product, some states do require that you have a license, a limited lines license. Any of you that have a full life license, obviously that would definitely work for this product as well. So we need to make sure you check with your particular bank, and obviously you can call Plateau to see what those licensing requirements are in your state, because they do vary by state. You can see here the difference between what a license authorizes you to do and what folks in the bank without a license can do. So there is a very big difference. Individuals that are not licensed, we do not want them quoting premium. We do not want them talking about the product parameters, benefits, etc. Okay. What are my responsibilities? Again, as you represent the bank and the Plateau Group, we mentioned it already, but it bears repeating. We have to offer this to every eligible customer. Those age parameters we talked about, the loan type we talked about, if that customer fits in that age range, if they're working, they can apply for the disability, and if they've got the appropriate loan type, we need to make sure we're offering these products to our customers. Okay. Terms and conditions, obviously, let them make the decision. I know that goes with offering it to everybody, but I've heard so many times, well, you know, they make $250,000 a year. They're not going to want this. Okay. So we need to make sure all of our customers get the option to make the choice themselves. And then having your customer fill out the application is ideal. I understand it's not a perfect world, but to have it in their handwriting is preferred. Okay. We don't want to be answering the health questions for them and writing their answers. So, and that's much easier as well. That way you're not having to ask the personal questions. Identifying need for protection. You have a lot of this information. I'm sure none of you got into banking to sell insurance. However, you've got a lot of their financial information that makes a perfect segue to this conversation. Inadequate life insurance. Do your customers ever tell you how much life insurance they have? What do they say? Got plenty, right? Not a whole lot we can do with that. How do we find out how much they have if they don't tell us? Ask. Okay? Anywhere on your application, if there's an asset portion where they're filling out their assets, if they don't fill out their life insurance, ask them, how much life insurance do you have? I noticed you didn't put it down on the asset section. Okay, once you know how much life insurance they have, do you have access to their credit report throughout the loan process? You know what their outstanding debt is. So if you subtract their outstanding debt, including this new loan, from their existing life insurance, are all of your customers going to have enough? Probably not. Are they going to go home and do this equation on their own? Is that a value-added service you can provide to your customers that they would appreciate? Okay. Primary breadwinner, obvious. Heaven forbid something happens to this individual, sickness or injury or passing away, finances are probably going to get pretty scary pretty quick. Okay. Two incomes, we already talked about that. Self-employed borrowers. Why might a self-employed borrower be interested in this product specifically? Okay. And some of them may have life insurance, but what's the likelihood they're going to have disability? Okay. Do term life insurance policies have disability features? No. Okay. Remember again, disability is our living benefit. We like that one. Nobody has to pass away. Group mortgage offers that. Term life does not. Okay, so your self-employed borrowers are eligible. Physicality of customers' occupation, hobbies, whatever you want to call it. This one's obvious, but I think also a very slippery slope. Are construction workers and police officers an easy customer to make the connection for disability? Sure they are. They have what we consider dangerous occupations. Do bankers ever get sick? Bankers get hurt? Okay. So although the physicality of someone's occupation is a good way to connect the dots, it's not the only one. Okay. So again, whether your customer sits behind a desk all day or whether they're out building houses, regardless of their occupation, this product protects your customers 24 hours a day, 7 days a week, 365 days a year. Is that a benefit to your customers? Okay. So you have this information available. Again, we don't want you selling this to anybody. We don't want you twisting anybody's arm. All we want to do is provide the information so our customers can make an educated decision. Is that fair? This is the information we're talking about. You have it available. It's what you do with it. So how do I recommend? How do I bring it up? Again, we've heard from your peers. We have bank partners from Alaska to Oklahoma, from Oregon to New York. Quoting protected payments has always been the feedback we get, hands down. It's always easier to bring the payment down as opposed to bring the payment up. The other very important piece is you've got a lot of options. If you have two people on a loan and they're both working, you've got joint life and joint disability, joint life single disability, single life, etc. So you've got several options. Again, let's make sure our customers have those options. All right, it doesn't have to be all or nothing. Okay. Again, it can be added at any time as long as you maintain servicing, and it can be canceled at any time. Okay, so again, it's just a different experience than what most of us have had on the credit insurance side. So just want to make sure we remember those. Talking about it early and often is another tremendous recommendation tip I might offer you. I've met very few bankers who can wait until loan closing and bring it up for the first time and successfully protect their customers. So throughout the mortgage process, application, the good faith estimate, and signing the loan documents are 3 different opportunities to talk to your customer about these products. Okay? At application, educate them how this can help protect their assets, their family, their credit. Okay? The good faith estimate at this point, you can give them a fairly accurate quote, what it's going to cost them. And then signing the loan documents, have an application ready. Obviously for those who want it, even for those who don't, because if they end up saying no thank you, you don't have to redo loan documents. You just set the insurance application to the side. Okay. These are the instructions on how to get to the quoting tool. This quoting tool not only will give you the cost of the coverage for your customer, it's also going to generate your documents. It's going to generate your ACH form, your insurance application, etc. Okay, so this system will do all of that for you. These are the instructions on how to get there. And again, we will have a web-based tutorial on how to do that on the website as well. If you have questions about group mortgage, please call your Plateau representative or dial the 800 number, and someone at Plateau will be able to help you. So if you ever have questions, we're here to help. We understand you're only dealing with this product when you're dealing with this specific loan type. So if there's anything we can do to help, that's what we're here for. So please let us know. Questions?
How long does it take for you to get medical exam contact and that kind of stuff? So for those of you?
Once IAC orders the medical exam, they're usually contacted within a week, but then whether or not they return the call to get it scheduled, all of that. So definitely having to schedule a medical exam is going to lengthen the process in most cases. Any other questions?
If the medical process and everything is approved and all that, is it from the time that it's requested to the time
when the loan closes. So, and that's a great point, Shannon. Thank you for asking that question. As you're doing the mortgage underwriting for the loan, we can be doing the insurance underwriting. So again, you can take this application, the insurance application, at the time you're beginning this process with the customer. So we can be doing that underwriting. So when the loan closes, it closes with coverage. Okay, does that answer the question? Any other questions? Thank you very much. I appreciate your time.